We go. Our last update in the grain trade. Todd Horwitz doing that for us today as we roll closer to the Thanksgiving break. I imagine things are getting quieter by the hour there, Todd.
You know, Mark, they've really been quiet here for quite a while now. You know, the interest in the markets has really waned because of the financial and equity problems and the Fed being involved. You know, when we have these outside influences such as the dollar and everything else affecting markets, it really does change. And it has been very quiet for the last number of weeks anyways.
You got that. And there are articles out today about all the pressure and stay away from commodities is kind of the message, it seems to me. What do you think about articles like that?
Well, I think that they're totally off their rocker as usual. You know, this is a time that actually you should be looking at the space. Unless the world is coming to an end and we're going to not have the need for food or any of those type of things. And, you know, I mean, the Bloomberg Commodity Index is at 17-year lows here. I personally am a buyer of commodities at these levels. I think this is the opportunity to start looking at it. And I think one thing you and your listeners want to know is that the U.S. dollar, which is priced in based on what the interest rate is, I think that we're going to get a big break from the dollar because no matter what the Fed does here with the interest rate, I think that the market's already priced in the highest dollar they can. I think the dollar starts to fall from here, which will help all of our farmers and producers out there.
Very good. And looking at the corn trade, under pressure here, everything down a little bit here on the day. You know, and that doesn't really speak to a longer-term trend then in your view. You still like this area to step in?
I'm still a big fan. Look, we could go lower, and I never would say we can't go lower. However, I'm an owner, and I'm looking that there's only news that can affect us positively going forward. Could we drift slower? Listen, the commercials are trying to bury the markets and push them way down because they want to squeeze out every last penny that they can. However, I think there's a much greater likelihood that you get a much bigger rally out of this once we get started. Now, right now, again, there's nothing to do here, obviously, as we know, but going forward, I see the news priced in for as bad as it can be, and with all the weight on it, if they can't push them lower, where are they going to go? They have to probably turn around and go higher, so I'd look to be a buyer.
Very good. And so, again, the corn trade a bit lower here at this hour. Soybeans down, or higher, though, as well today by a couple of cents. What do you make of that soybean complex here, still higher?
Well, I think what we saw was very interesting. You know, we've been watching that 850 level in Jan beans, and of course, this morning we traded down to 844. I think you had a quick rush in. I think you had some sellers step in, but immediately you saw what happened. They immediately sprung back to about 24, 25 cents from the lows. That's the kind of action I'm looking for, and that's what indicates to me that most likely the lows are in. They can squeeze them, but at the end, the longer-term trend, I think, will eventually turn to be higher here.
Very good. Todd Horwitz, live from Chicago. We'll take a break. One last look at the livestock trade. More pressure in the cattle and feeder cattle, and we'll get his thoughts updated in 1 minute.